Hello and welcome everyone to the weekly Delphian meeting. Thank you for tuning in. So today's agenda will go through our market update, earnings trades, and then Joe's analysis at the end there. Just kind of want to give you guys a little schedule look here. So we'll have our regular meeting next week. The 20th, Joe and I will be traveling. We're out in at a conference the end of the week here. So we're not going to have a meeting on the 20th. And then 27th, we'll just resume. So the earnings plan will be, I'll be putting that out. I won't be able to get it done by next meeting, but I'll be putting it out probably like 15th to, before I leave on the 20th. So it'll be pushed out there and then we'll review everything, results and just kind of go through the regular plan overview on the 27th there. So that's the schedule. Okay, let's get started. So overall market, SPX, NDX, Russell, all in still in state one. Joe did, we kind of saw this almost at the same time, pretty much all green down here for the sector. So you don't see that very often. Pie wise, we're above 45% in state one, so technically overbought. And we inched up the pie, not big movements really anywhere, mostly like twos going into one, but inched up, so we're 60% right now. So I did want to so this is the state. So we got state one at 46, state three at 23. Not that big a change from the previous week. Just a little higher for state ones. The twos really, just a little drop in twos into ones. Everything else is pretty flat. Sevens, fives, fours, they're all kind of flat. But seeing that we're over 45%, just kind of wanted to pull this back and give you guys a little perspective. So, this is going back to, the fall of 2021. So we had 47 there, 52. That's the highest. You can see if we go further back, we had that crazy run where we got up in the, up near 80. But that was pretty atypical. These are more typical, where you can see, like 47 here, 52. How many did I get? Is there another one on there? Oh, 5, sorry. That only got 37. This one's like right around, 43 something. So this one did get up to 51. So, that's a good number. Obviously, that's the longest since here, November, got up close to that. But, just kind of wanted to show you some of the overall, the kind of like visuals on that 45 and, why I put that out as a fairly good indicator of overbought, oversold. You can see, if we start getting, I'll just take out the eights. If these tops, if we start seeing a big ramp up in twos, then it's going to pull back. So we got here, we had this nice little ramp up, and then it didn't kind of follow through. So we typically look for those twos, and then start transition to fours, things like that, as far as getting a significant pullback, not a 1 day, 2 day pullbacks like we're seeing here. So that's just kind of what I'd be looking for as far as this. So technically overbought right now. All right, new highs, lows. Still showing positive signs here. We had almost 600 on Friday. Same thing on Monday. So, anytime we get these, we're getting these green bars and, the lows are pretty much flatline, it's bullish overall. So have to be careful and look for some spikes here, as long as, big transitions into two. That'll be a good indicator that things could be turning, for a pullback, which, I mean, you look at the chart, since October, it's pretty much been up, right? Minimal, couple day swings, but since end of October, it's been pretty much up. So, definitely due for little retracement pullbacks, but until things, turn over, you just, I guess, keep running with it, right? So, uh, overall bullish, bearish, nothing big there. I like the 1 year chart. Yeah, so, got near crossing and then, basically found support and, we've just been slowly kind of climbing. We're way off these real high numbers here, but as long as we're, bullish and the highs are continuing, keep grinding higher, um, until things start to shift. So, all right, SPX. So, from last meeting, it pretty much closed right on where it was. We had a nice couple days and then, a couple pullbacks and we're back up today. So, the grind higher continues, you know, might get double the average days. Um, could get triple the average move, if we continue. So, but not much else on that chart. Well off the moving averages. Let me let's draw the. There we go. I'll put in the lines. So that's the bottom of our range. So our previous range was, was 46 to 5. So now it's, it's holding. Like to see a retest in that hold, then I'd be real bullish. But we're hanging above 5,000. Longer we're up here, the better, obviously. But that's kind of where we're at here. Russell's more of a indicator here. So, the previous high in the state was 2071. We talked about that last week. Made a run here, failed, came back. So we actually eclipsed that. Got up near the top end of the range, 2100. So that's really what I'd be watching. For the Russell is 21. Obviously the bottom of the range down here, 19. There's the top, 2100. So we can get above there. Obviously, it's going to be get above and stay above 2100. But this is going to be strong resistance. Not only is it between target 1 and 2, which is going to be typically decent resistance. Obviously, 3 is the strong resistance, but 2100 top of the range, that's going to be pretty tough to get through. So let's look at the chart here. But positive. Not hasn't been a great state one. It's been in here a long time, obviously, but hasn't been as good as the other ones, obviously. But so we talked about moving average wise, 50-day, obviously been important on this move. So this is going to be kind of like the downside. 1983 for support levels there. Also the entry price. So that's like, sorry, 2022. So that's going to be support now. And then over on here, the 50 days is going to be, we talked about this a lot in these bull runs, 50-day Especially, usually it's SPX, but this time, 50 days, Russell's given us the signs as far as support and stuff like that. So that's, kind of to the downside, 2022 and then 1983, and then obviously the top 2100 here. So we pull out. So, we haven't been above 21 since this Fed day back here where we just popped up down the next day. But so really it's been over 2 years. This was obviously like a 1 day thing in March, but beginning of 2022, we were above 2100. So been a long time down here in the basement. So real far from all-time highs. So that's kind of where we're at. But the range 2119. See if we can get above that. It's going to be the resistance to be looking for as far as the markets, and we're a little bit a ways from there. So okay, this when I pulled it up, 10 years pulled back some. So that was right around 4.3. So now down to 4.1. So obviously that's good for small caps and over the market overall. As far as that, Fed, not too big a change really. So we'll go through much. We got next meeting 2 weeks. So no cut there. Pretty much first cut still June. Not much has changed from last week. Pretty, percentages are pretty close. And same thing longer term, end of year. Kind of smidged like a little down, but not really. So these numbers just kind of flipped from last week. But still, so this is 75 to 1% cut for the year. And sounds like Powell put out, in the news basically saying he expects cuts this year. So this is kind of, I would say, 75 would be, my guess. Obviously depending on how the numbers come out and stuff like that. So on the bigger news, so we're getting close to 7.5 trillion. We're only 67 billion away. So I guessed that would happen in March. Welcome to March. We're in March. So probably in the next couple weeks should be down there, just based off of the line here if they continue. Of note, so we talked about this. So the bank BTFP, Bank Term Funding Program, that was the emergency bailout after collapse of all those smaller banks. So that expires on Monday, March 11th. So just be a little leery. We've been seeing in the news that NYCB Bank is in big trouble. Let me see. Community Bank. This one's in big trouble. Well, even so, this is part of that group. Trying to raise capital. So obviously this is my biggest concern. In the next month, are the banks, the small banks. To go along with that, I found a nice little graphic here. Small bank delinquency on credit cards versus large, biggest 100. So you can see we're at 7.8. This goes all the way back to like 1990. So we're at all-time highs on, so obviously consumer is having some problems with elevated groceries and rents and all that stuff. So yeah, this is my biggest concern right now is these small banks. We'll just have to see. So I think that was it for market overview. I'll open up to questions, comments.
Hey, Josh, Dan here.
Hey, Dan.
Hi, do you think the small bank issue is the reason gold's taken off?
Um, I think gold, yeah, it's funny, Joe, I talked to Joe. I'm like, hey, gold's, at all-time high. Joe doesn't really care about gold. I'm like, well, I never really cared about the 10-year before because, it never moved, but now it's super volatile, right? And, it's just like, well, gold, silver, like these could be like that. I mean, I think the biggest driver for that is, the Fed's printing, adding $1 trillion of debt every 100 days. So I think people are starting to, worry about that. I mean, that's pretty crazy amounts, but I mean, that's just kind of my theory on it. But Joe, did you have an opinion?
It's not based on much, but Dan, I would just think there's some sympathy to the run actually in the cryptocurrency. I won't call it a mania, but the way Bitcoin is taken off, I think there might be some sympathy in gold coming out of that run.
Yeah, I agree with that as well, Joe.
Okay.
Interesting. Thank you.
Yeah, thanks, Sam. Anyone else? Questions, comments?
Well, the jobs report's out Friday, so I don't think that'll change anything on the Fed rate bets. But there's usually some reaction that's tepid until that comes out, and then next week it usually is like a thing of the past.
Hmm. Yeah, I don't expect much out of that, but I didn't see what the expectations were, but
195.
195.
Yeah, I got a couple charts on that.
Okay,
Just
I'll let you dive into that. Okay, thanks, Dave. Anyone else before we get into earnings here? Okay, let me run through earnings. I was a little worried. We had so many bearish trades, a lot of bearish runners. So we had a bearish
Well, it seemed
pre-runner.
like there were more this time, more bearish runners.
Mhm.
Is that my perception or is that true?
I'd have to look at the raw numbers, but yeah, I think there are more bearish runners. Um, but I'd have to look at the numbers. Yeah, so it is pre-runner, bearish pre-runner, pretty much entered at 10 and got out at the close. So, hit the profit target. That was good. So brought this one up positive. We had only one other one that Roku was a slight loss. So, and then a lot of these bearish runners. So we still got 8 open. These two we kind of just got in. I think this one will probably hit today. I think it's down. But yeah, we've swung. Yeah, we were down almost 800, so now we're up 500 for these trades. Um, yeah, these two oil ones are kind of dragging us down, but we're able to close off. Let's see, Salesforce on the 5th with nice return, and then PayPal was a slight loss, and then Alibaba was, a slight, pretty much offset it, but doing pretty well. I was just concerned there were so many out there. I was kind of rooting for a pullback, but we got, a couple days and able to close some of those trades, but still kind of rooting for a little bit of pullback so we can have, better numbers here, but still, net positive, which is good. And then we had another one open up, non-mover, and that one is gold miner, Franco, Nevada. So we're looking for it to get around that 110 strike. but it hasn't moved much. It was up, I think, almost 1% earlier, but we just needed probably below 111. We're in that kind of area to hit a nice profit, but should be, it's looking good so far. No trades have done well except for the Delta. That one was bad, but the other ones made up for it. So still profitable, and I think all of them are profitable at this point, all the strategies. So, but we got the next earnings plan coming up, and just a reminder, Q1 has not been good the last 2 years. So, 2 years ago was brutal, and then last year was kind of almost like a break even. But so the Q1s have not been kind. So, okay, that was it for the earnings update. Any questions, comments?
Good job. That's my comment.
Yeah, it's not me. It's the program. It just it does all the work. So yeah, we'll just keep it going, and we'll get the
Yeah, keep
result.
it going. I appreciate all the work. It's working for me.
Yeah, I mean, it's a lot easier for me to I can knock it, all that testing out and faster than everyone, by a factor of 5. So it's just better for me to go through and do it. And you guys have the data, if you want to go through and add in trades, it's pretty easy to do. But yeah, it's been good. Keep it going, and let's just hope Q1's good this time. So, and we'll go through all that on the 27th. But it'll be in the system, the week of the 18th. So, okay. Well, thanks, guys. I'll hand it over to Joe.
All right, Josh, everybody.
Okay.
Let's see here. Let's get this screen up. Yeah, as far as the trade types, Josh does a great job tracking all that. There's certainly limited time on our part, but if you have, and we essentially only have a couple different trade types. If there are different types of trades, and Josh and I have been talking about this for some time, eventually we're going to add some different trade types. We're just trying to get the platform where we want it before that. But if you have certain trade types you'd like us to test over time, don't hesitate to reach out to us about that. And also something we talked about a few weeks back, with regards to anticipating transition changes, in the various states. We finally did track down Ashok, who is super busy, running SS Tech. And at this point, Josh, his comment was, you can't really anticipate, even behind the scenes when those transitions are going to happen. That's kind of how he put it. Wouldn't you agree, Josh?
Mm-hmm.
So, there's a chance over the next few months that, Ashok may get back into the algorithms. But so currently, no way for us to anticipate in advance. And, the market just obviously continues to be wildly bullish, and, along those lines, it just, in a way, we've been pretty positive about things. But, I mean, after a day like yesterday, and then to see the market open the way it did today, took my damn breath away. I mean, we basically went sideways all day Monday. We closed down, a fraction, but you closed on the lows Monday. And I think we talked about this, again, over the last couple of weeks. I'd like to see where the markets close. And Monday we closed on the lows. So I wasn't surprised, really. We came out yesterday and we were down. We're frankly down more than I thought we might go. Part of that, I think, was driven by Apple, which we've been talking about. But, it was a damn good down day. And, I mean, the market's been on such a tear. We should have a few down days. And lo and behold, we come in today and, away we go. It really does take my breath away. I think it speaks to the power of this bull market. all surprises to me are to the upside, going to continue to be. And, I think bottom line is it's earnings. And, the earnings expectations, we've got FactSet, we've got LSEG as a couple different sources out there, Zacks. I guess first quarter they were looking for 3.4% year-over-year increases. Second quarter expectations are for 9% year-over-year increases. And basically for the year, I think somewhere between like 9.5% and 11.5%. And, the surprises seem to be we get, what do we get? 75, 78% beats quarter after quarter. And I think we exceeded that slightly this year. So I think it's all about earnings. They continue to be outstanding for the most part. And I think it is, about the margins. And Josh and I talking about, I'm not sure if the group here, excuse me, get into the weeds and track margins. One headline I saw yesterday was for, I guess it was, I can't find it now, Target. And I guess Target's, margins were better. And look what the stock did. I haven't been paying any attention to Target specifically. I did pull up the chart. There's the longer term chart. So you can see still a long way to go back to the old highs. I don't know, how much they made back then versus they're making now, but, it's kind of exasperating. It just suggests to me, there is so much liquidity out there looking for a home. We mentioned Bitcoin earlier. You've got the whole ETF stuff driving, a good portion of that move. But, I think it comes down to the liquidity that's in the marketplace, and a lot of it's finding its home in the markets. So there was some talk about non-farm payrolls. Expectation is 195, but I think, it's important to keep track of the difference between private and government. So again, this great site that Josh and I, always use, and I think maybe many of you do too at this point, Trading Economics. Here are the government payrolls, not private. I think the expectation for Friday is, 25,000 jobs, in government, and about 170 expected in private, and so a total of 195 is around the number that they're looking for. So that'll be Friday. Tomorrow we get a productivity number, and I just thought I'd pull that up. The whole AI phenomenon and how it's increasing productivity, they're all buzzwords, but that, there seems to be something meaningful to that and its impact on how companies are running their business and ultimately earnings. So this number comes out tomorrow at 8:30. It's non-farm productivity quarter over quarter. Anything related to productivity certainly catches my attention. And here's the last 5 years. It's just kind of interestingly, we've got blue bars, as long as this market's been, roaring for sure. So, just something maybe to pay attention to tomorrow morning. There's so many numbers, it makes you dizzy. The trend is up, and, we'll just, something, I'll be looking at tomorrow. So, back to the charts. As Josh pointed out, not very often when all the sectors are in green, and most of them are in state ones. It's really pretty amazing. In terms of the pie, we got a hell of a long way to go. We're at 61%, bullish, as Josh, showed earlier. It's that 80 range where, you're looking for a pullback in the market. Yes, Josh talks about 45 and higher in the state ones being overbought, but I tend to pay a little more attention to the pie, in general. And it's a long way to go to 80%. And I just think, again, it could be an awful lot of room, still to the upside with the markets. Let's see, Josh, talked about, the banks being a concern. So I thought I'd just pull up, a couple little charts there, XLF, like everything, an extended state one here, all time, almost 3 times the average move, like many things, much more volatile than, we've seen in terms of volatility is not maybe the right word, but, the moves, the bullish moves, in these state ones are really impressive. Let me pull this out a little bit. I mean, it's just, it really speaks to the strength of the market. Damn near no pullbacks, in the financials going back to the October lows. Pretty remarkable. Well, I just thought I'd pull that one up. Let me expand that a little bit more. That's what I'm trying to do, just to get a perspective. Maybe we are, we're close if we're not through all-time highs. I mean, the market basically, we've made obviously all-time highs in all the indexes, over the last week or so. We get a 1-day pullback, 2-day pullback, and we're right back at it. Here is the regional bank index that we talk about once in a while. Again, I just thought I'd pull it up for perspective. Turns out, had a nice day yesterday. The state projections, because this typically doesn't move a lot, not big ranges, but at this point, no cause for concern with this. If we break below 45, might it catch my attention? Yes, but I see it kind of as just a little bit of a lazy chart at this point, not giving me any cause for concern. SPX, Josh talked about this stuff. I think it's about 135 days, 136, maximum, state ones. Long way off, but not going to surprise me if we get to that. Yeah, not really much to add there. Here's the equal weighted. We basically are trading right at the all-time high here, 164.90. Before we jumped on the call, that's literally where this was. So, right up against that all-time high. And again, the low here, it's basically straight up. So, that's why today just blew me away. I thought for sure we'd get a couple days of back and fill, into the non-farm payroll, number on Friday, but not to be. What else do we have here? NDX, get, one red bar, a couple red bars and back up. XLK, I think, the leader, I think by day in terms of days, we're up to 82 days now, 146. Long way to go that way, but you get, and I think a lot of that was, probably Apple yesterday. You get the big bar down, and today constructive. Speaking of Apple, there it is. We're talking about the importance of that 180 level. It broke that and pretty much fell out of bed, at least momentarily. And again, pretty wild that the market just continues to head north with, the Googles, the Apples not participating. And so, we've got some rotation. You got the New York Stock Exchange Index, I think trading now at an all-time high. There was the S&P 500 equal weight. What do we have here? We got, 165, the low in October. So, whether Apple's going to, it doesn't mean that Apple's, going to get crushed. It's just not participating. And I had a laugh yesterday. You had, the NASDAQ down, I guess it was close to 300 points, and there was NVIDIA up for the day, up 7 points in it. And I think maybe, Josh, you had mentioned, the rotation out of Apple into NVIDIA. And And I did hear sometime in the last week where, and this is almost obvious, but NVIDIA is the new Apple. And that really kind of resonated with me. I haven't gone back to look at Apple's stock over the years to see, for how many years it had monster runs. At some point, I think I'll do that. But it did resonate with me that, maybe NVIDIA is the new Apple.
Wait, hold up there just a second, would you, Joe? Can you widen
Certainly,
the Apple
Dave.
chart? Can you widen the Apple chart out just a little bit?
Absolutely.
Because that was a good look at the monster runs that are just continuous and where we are. And if you look at the fibs, if you put the Fibonacci retracements on, from the last sort of big rally, we're right on the major, transition kind of support or not numbers.
You talking from the low here, Dave? You talking from the 130 low? You talking from this low here?
Yeah.
The fib numbers? Yeah.
No,
Okay.
no. Go to November. The most recent one from like November, where it's the bottom where we're getting close to
Okay.
again.
Gotcha.
Because that's kind of where I draw current potential support for, and it's still a little bit down. And if you go way back to the left, you can sort of see August 22-ish, there. So if you put a horizontal line in there, we're lining up right at kind of multiple places for possible support or not. But I wanted to comment on your comment about the very long runs that were just extensive, and they build that up based on their services. Anyway, the couple of comments that you made really hit, resonated with me. Liquidity with no place to go, or with wondering where it should go, and it used to all go into Apple. That's where it used to go, is to Apple and Microsoft, and so some of those big mega caps are hanging in there, but there's some that are starting to drop out a little bit. And I think that's fueling some of the other portions of the market that are different markets, I guess, or different subsets of markets that have been kind of ignored. So the breadth, I think, is good. I'd like to see I think it's better for the world if more stocks were participating in a bull move than just a few. And the other thing that I wanted to just say, right with you on the AI buzz stuff, is that there's it's fueling, let's say, just the buzz. It's hard. People have a hard time describing AI, and I talked about this a lot, but it's almost good that it's hard to describe, because now you can't. How will you know if it fails? There's no way to really pin a particular stock its benefits on AI. You think Google and all the big players just have AI? They've always had AI. They always will have AI. So it's when does AI contribute more to their stock price than any other period? It's hard to discern the impact of whatever AI might be, and it's a lot of different things to a lot of different people. So as long as NVIDIA keeps going up, there's going to be AI buzz. And what's kind of funny about that is I think the hardware guys are getting much more of a benefit than the software guys. The semiconductors are all doing pretty well, and they're not all having great financial quarters, but they're still in different AI niches for this or that or the other sub-markets for AI. I listened to Marvell just the other day, and the CEO says, well, all of our segments are down, and they're going to be down sequentially for the next couple of quarters. But our AI segment in the data centers is going to be carrying everybody, and the stock went up. So,
right.
What do how do you diffuse that for the people that don't know, that are bullish on it? Well, I don't get in the way. Don't stand in front of the steamroller. So anyway, those are the things that got me, is that there's a lot of money on the sidelines that's been sitting there, and people still aren't sure where to put it. it's going a little bit broader than it used to go. And I don't know, well, it's going to keep melting up until it doesn't. So be nimble and be bullish. That's fine. That's fine. That's what I'm doing.
Thank you, Dave. Anybody else want to throw in a comment or two?
Yeah, hey Joe, it's Josh. Just real quick, another thing that kind of popped in my head is, there's a lot of money in those we showed flows into like the money markets and short term. So, with the Fed, kind of planning to, drop rates, people are probably starting to think like, all right, I can get a 1 year, but going longer out at this point, doesn't make a lot of sense. So some of that money, especially when rates start coming down, will be flowing back somewhere else, right?
Agree completely, Josh. And, think in all those years where there was, the banks were paying nothing and within 8 months, they're paying 5%. I mean, there's so much money sitting, I think to your point, going to be looking for a home and, it's going to be, I think, a very, very interesting 2024 to the upside. Anybody else? Well, a couple things. Tomorrow night is the State of the Union address. Obviously, we know it's certainly Trump. Whether it's going to be Biden, it seems that way. I remember listening to the State of the Union address last year, and I thought that Biden's delivery was extraordinarily good. I couldn't believe. I think the speech went an hour or so. I don't know if some of the gang on here listened last year, but I was floored personally at how good I thought he presented. I don't know how many people I meant to try to look it up to see how many people watch the State of the Union address. I can't wait to see it tomorrow, to see how he performs. Not speaking to the content of the speech, but just how he delivers it. And I think, I think generally presidential elections don't have a ton of impact on the markets. I think it's, kind of depending on, it's the first and second years, that maybe, don't do quite as well, I think, and then maybe the third and fourth years better. Right? But certainly, it would sure seem as though the markets probably respond favorably to a Trump second presidency, would be my guess. But I think that's the second half of the year. Long way to go to get to July, August, September. I think you may recall we had a meaningful low prior to the November election of 2020. That September-October period was a meaningful low in the market. If we go back to the charts, so that's something that's coming, obviously with the election. But I really look forward to tomorrow night's State of the Union address. A couple more charts. Let's see. XLC has. We can't forget XLC. It has been a leader. Really, what do we got? Well, there's Apple, but we got. XLK, 82 days. That's what I thought. XLC, only been a day shorter, in that state one. So true leadership here. We talked about a few weeks ago, maybe if we get any meaningful pullback, it's going to be, our state 3 target levels. We're not there in most of these cases. We're still extended beyond. So XLC, still something to, keep an eye on. Look at that run. Just something else, and hard to imagine we're going to keep going, but I think earnings are going to drive this thing, and I think, likely we will. We haven't talked about Sudhir. I know IYT, you talked about, some time ago, so I just thought, I'd pull it up to see what it's doing. Its targets aren't, wildly spread, so kind of narrow, but like most things, through target 3 and well above it. were more than twice, length of time and move. So just thought, it's a pretty good engine for the economy. Just thought I'd pull it up, and, it's like most things, on a tear as well.
Everything's bullish.
Yeah, it's true, Sudhir. And here's, that target chart that I talked about earlier, and margins. I mean, I'm looking in the news, it's, looking for productivity increases and margins. They're the headlines that I'm after to see, if you get, the productivity seems to be increasing. If the margins, if you start to read about margins not maintaining or increasing, I think that's when you get a meaningful sell-off in the market. But tracking that, I think, is awful hard. Last night, and Josh does a great job going over the charts, in Market Pulse. When I was looking last night, and I hate to, kind of keep being so, I'm not trying to just be bullish, but it just kind of looks that way. And so I was going back and looking at new highs and lows, and just looking at them from a time perspective. And it's sort of caught my eye that, when you get into a move where, the lows are kind of flatlining, and, you're getting, a good period of new highs, that tends to be a year plus. So, you can pick the period here. This was like April of 20 to October of 21, flat line, for the most part, with the new lows, but those new highs, ran for a long time. You got a period, back in 2019, where, for about a year, I think you had extended, new highs with not much in lows. From 16, that was, the presidential election of 16. You had about a year and a half period, almost 2 years, where the new highs extended. So that's kind of very, very, very high level. But, the new highs have really just started after a period of, kind of a mix, highs and lows. And goodness, if, it's just starting the last few months, we could have, a long, just another possible thing to keep an eye on. And Josh does an excellent job pointing this stuff out. But, we haven't had really a hiccup of new lows since, the major low in October. And, maybe that's going to portend for, additional time of bullishness. And, just one that just doesn't relate. Yeah. Just kind of, how's that for a state one? This is Abercrombie and Fitch. And, I think we're probably all familiar with that name. I hadn't looked at the chart in years, and I saw it in the headlines, in the last couple of weeks, and pulled it up, and, how to say it. I mean, I just couldn't believe it. And, I think there's a headline flying around now. They're looking for $5 billion in sales, but I was just completely floored by the chart. And, one of these days, and we're working to improve the pages. It's slow to happen. The speed is frustrating as heck for all of us. Hopefully well, not hopefully, we are working on that. But I mean, this platform is a hell of a tool, in so many ways. And once we get the speed to where it has to be competitive, we're going to be able to uncover, an incredible number of opportunities, I think, just based on the information that's on the platform. So unfortunately, it's still a work in progress. We do have a Shook's ear, but we're unfortunately just a very small team behind the scenes, and it's taken a hell of a lot longer than we had hoped. But that just, I'm not saying we're going to buy calls and, buy, calls 12 months out in Abercrombie and Fitch and, all get rich, but it just, there's so much information, in these algos that Ashok's created. We've talked at a very high level about him, as I mentioned earlier, getting back in here, kind of refining some things, maybe adding a couple areas, and we really look forward to doing that. But the point of that is to be able to get into this platform, when it's running faster and doesn't take so much time, and we can really, begin to share more and more opportunities. So, Josh, comments?
Yep.
Hey, Joe, Dan here.
It covers it. That's, making daily progress, but it's a little slower than we want. So go ahead, Dan.
Yeah, Dan.
Is there an index or a chart or anything that would measure the cumulative gross earnings year over year, so that there's something to compare years by in earnings that you're aware of?
Not that I'm aware of, but we're not paying for, well, actually, I guess we pay Zacks. So to answer your question, Dan, I don't know of it. It's Zacks, it's FactSet, it's LSEG, or the sources that I go to, but I haven't seen that.
You can go into fundamentals, obviously. We have all the data in there you can look at.
That wouldn't be cumulative, though.
No, I mean,
I
you'd
think
have to cumulatively add it, but
Yeah, I'm just struggling to see, how we've gone to so quickly, since November till now, we've gone almost straight up, based on what we're saying is earnings and the potential for a lowering of interest rates. And, I'm looking at back in November, what started all this? All of a sudden, AI started making the front headlines, but that only involved relatively few stocks. So I'm thinking, what made the markets take off that steeply? Okay, and the only thing I can come up with is you probably had companies like Vanguard and BlackRock and State Street starting off the bandwagon. They probably dumped tons of money in there, because I don't think the retail traders could start that off like that. It had to start somewhere, get the avalanche going, so to speak. So I'm just trying to figure. That's why I asked the question about the earnings year over year. Are they really that much greater? Because as we went through COVID, a lot of the forward guidance was for earnings was lowered, quarter over quarter.
Yes.
So where are we at this point? Because I don't, other than recently, I've, there a lot of the companies, or at least I should say the heavily weighted companies, the AI stocks, yeah, they're calling for, really wonderful things going forward. And now you see it starting to fan out, possibly across broader markets, looking at the Russell start to take over, and it makes me think, like, what's driving this? And then I start thinking, is it even political? Because it seems like as we get closer to the election, that's where the Feds is starting to drop rates, possibly. So is there political? Yeah, I'm throwing all kinds of stuff in there, but trying to make heads and tails of this market.
I think, in addition to, and I agree with you wholeheartedly with regards to the whole AI thing, started to maybe pick up a little momentum in the third quarter. I think, beginning of the fourth, the whole idea of a soft landing, I think, because everybody was calling for a recession. And I think that mindset is one of the catalysts for, the bottom. It just happened to be in October. I think there was that. I think, along with this AI is this productivity, increase. And, and that's where, you know, I really personally, I think there's a heck of a lot that's going to be similar. I mean, the markets, I think, might be darn similar to the tech bubble of the late 90s. I really believe that. I think, you know, we've talked about that a little bit here briefly, high level. You know, in the late 90s, most of those companies weren't making a penny. You know, now many of these companies are. And if AI is going to be so revolutionary, and it seems like, you know, maybe it is. I mean, it's starting to creep in. I got a doctor's appointment tomorrow, and I don't think I've ever checked in online in advance in my life. But I did it because it's a new doctor. My previous doctor retired. Well, damn it, if you know, I'm filling out the form and I'm reading it, you know, they're using AI. They're telling me on the form that they're using AI as part of this sign-in process. That caught my eye, you know. So anyway, a lot of factors, Dan. I think, you know, I think liquidity, one of them for sure. You know, we've run a long way, but those numbers I was talking about earlier, in terms of earnings projections, okay, up 3.9% in the third quarter, in the first quarter projected, 9% in the second, about, you know, 9.5 to 11% for the year. You know, something I didn't mention that kind of surprised me and this is FactSet. You know, they talk about forward price earning multiples. Well, according to FactSet, the 5-year average for a price earnings multiple I think it's the S&P 500 is 19 was the average 5-year forward PE. 17.7 was the average 10-year. Well, at current levels, you know, we're at 20, just over 20. So not much beyond the 5-year average. And I think, if anything, the surprises seem to be to the upside in earnings, and maybe I think in large part to two things: to the margins that inflation has afforded companies, and then maybe to this productivity AI benefit. So, like you, I'm kind of all over the board with this thing, but it's, you know, surprises continue to be to the upside. So,
A lot of moving parts.
always, it's to me what makes the market so darn exciting.
Oh,
You
yeah.
know, it never sleeps. Anything else, Dan? But thank you.
Thank you, Joe. I appreciate it.
Anybody else?
Yeah, Joe, with you, this is Robert here.
Hey, Robert.
How you doing? With your love of statistics and your mention of the State of the Union address, I was looking at the website predictit.org, where you can actually vote. You can vote on the presidential candidates with real money. And right now, Joe Biden is going for 82 cents, up 2 cents. Gavin Newsom is right now 9 cents, down 1 penny, with 22.4 million shares traded. And right now, excuse me?
Yeah, go ahead. Donald Trump?
Yeah, right now, Donald Trump is going for 93 cents, up a penny. Nikki Haley is at 2 cents, down 1 penny. 59.6 million shares traded.
Very interesting.
What site is that?
I think they gamble on that in UK. I think, you know, it's a thing over there. They bet on our elections.
I believe I think we can participate on predictit.org.
Yeah, I'm not sure.
But it would be interesting to watch how those numbers change post and pre State of the Union.
State of the Union? Yeah. Yeah, and so that's predictive.org.
Predictit.org. Yes,
Okay. Thanks, Robert.
sure. Anytime.
All right, Josh. Well, I was a blabberhead today.
No, well, good, good info. All right, anyone else got questions, comments before we wrap it up? All right, we'll do it again next week. Thank you all.
Thank you.
Thank you.
Have a good week.
Thanks.